Hey guys, it's James, and today I wanted to talk about XYLD. It's, I guess you could call a sister fund to QYLD, and I wanted to analyze with all of the fund stats and change some of the growth and contribution numbers to see what we would get on our short-term and our long-term graph. So let's go over to the XYLD page on Global X. XYLD, they write covered call options on the S&P 500, but I wanted to go down into the document section here and show you their covered call ETF suite. So here are all their covered call and growth ETFs, and currently in 2021, December 2021, they have 5 of them. So they have a QYLD and a QYLG. They both cover the NASDAQ 100. QYLD is focused directly on just the dividends or the covered call. They just write covered call options on 100% of the fund. QYLG, they only write covered call options on 50% of the fund, and the other 50% is allowed to grow. So depending on your investing strategy, what your purpose in the stock market is, if you want to just collect dividends, you're probably better off going more toward the D funds, XYLD, QYLD, and RYLD. So as of right now, RYLD does not have a call and growth ETF, but this RYLD right here, the fund was just instituted in 2019, so they're probably playing around with the Russell 2000, and they're probably going to see what happens, and then probably open up a covered call and growth ETF, but we'll have to see. All of them have a monthly dividend distribution. Their expense ratios are about the same on all of them, and when you have the XYLD, XYLG, it's following the S&P 500, Q follows the NASDAQ, and R follows the Russell 2000. So this document is on their website if you wanted to take a look at it. And it looks like here is the monthly distributions. XYLD seeks to generate income through covered call writing, which historically produces higher yields in periods of volatility, which the past few years has been quite a bit of volatility. Again, they have monthly distributions, and we'll get into their distribution numbers here in a little bit. 8 years running, and the XYLD writes call options on the S&P 500 index, saving investors the time and potential expense of writing call options themselves. So the covered call options at Global X, if you want to write call options but you're not comfortable with it as of yet, go ahead and invest in these 5 different funds, and you'll reap the benefits of call options. Let's take a look at the Yahoo Finance page. Right now, the total yield is sitting around 10%, or 9 to 10%, which is pretty good for a $50 stock price. So the dividend yield is one of the highest out of all the Global X's covered call options ETFs. So you see just this year, it has grown from $46 per share to $50 per share. If you look at the 5-year time frame, we had that dip. The S&P 500 had that dip in March due to the coronavirus outbreak, and then we kind of just started to live with it, and then the stock market continues to go up, plus government pumping money into the economy. So the fund inception date was back in the summer of 2013, so since then it has had a few ups and downs, but has consistently paid a dividend. Go over to Seeking Alpha, and their 1-year growth is 7.33%. And Seeking Alpha data only goes back to about 2018. I believe they did maybe a restructuring of the fund in 2018. So Seeking Alpha only goes back to December of 2018. That is a 9.8% growth. Let's check out their dividend history. You go back 5 years. They have been paying a pretty consistent 20 to 30 cents per month, and here more recently it's been closer to 35 cents a month. Look at the 1-year history. It's been 45 cents, been pretty high dividend payout. Seeking Alpha gives it a decent A+ dividend yield and a decent B+ dividend growth rate, and historically this is what their dividend yield percentage has grown to. A few years back it was at 2 to 3% yield, got up to about 10%, and then they had to drop it and then it has slowly climbed back up here in 2020. It's sitting around 9%. So let's take those numbers and go back to our dividend investing calculator. So the fund is XYLD. The fund today, as of December 20th, 2021, the fund price is $50.22. Dividend yield is 9%. Expense ratio is 0.6. So that's an annual payout of $4.52, which is not bad. I think it's one of the higher payouts of all their Global X's covered call ETFs. So let's say play with a few scenarios here. Let's say we added no money into this fund. We just dropped $10,000 into our M1 finance account, put it all on XYLD, or you had a portfolio and you dropped $10,000 of your portfolio into XYLD with a 7.33% annual growth rate, keeping the same growth rate as in 2021. Your $10,000 in the bank would basically not grow at all. Your dividends not reinvested. After 1 year, you would have $733 on top of your $10,000 investment, and with dividends reinvested every month, you would have $11,690. So with $10,000, your share price, you're going to have a ton of shares at $50 each. I think that would be about 200 shares. So every share you would get a 38-cent payout per share, so 38 cents times 200, and your dividends per year, we go over to our math tab, after a year you're gonna have $900 worth of dividends, which is not bad. So that's where we come to that number there, 11,699. You go out 2 years, 3 years, 4, 5, 8, and 10, and your $10,000 sitting there would have grown to about $38,000. But let's say you weren't expecting the growth rate to be 7% every year. Let's bring it down to about a 4. Let's say the dividend yield averaged out over 10 years. Let's say it dropped down to 6, average 6% over the past 10 years. Your $10,000 with a more modest growth rate and dividend yield, your $10,000 will have grown to $22,000, which isn't too bad. So let's go with a more modest addition, or a more modest monthly addition. Let's just go the short term here. Let's say the stock market continued to go up like it did this year. They continued their dividend payout of 9%, and let's say we added $50 a month for the entire year of 2022, which I would like to do. After the end of 2022, your $1,000 plus $50 a month will have grown to $1,790, where in the bank you would just throw your $50 a month into the bank, a savings account, you would have $1,600. So you'd have about an extra $200 after a year's time, which isn't too bad. Let's say you wanted to add a little bit more money, $100 a month. Your $2,200 will have turned into $2,411. So let me know if you guys liked that video. Head down into the comments and let me know your thoughts, and if there's any other fund you'd like to see and what type of growth and contributions you'd like to see. Let me know. Hit that like button. That is the best indicator of me knowing that you all like this content, and subscribe to the channel for more content like this. And with that, thanks for watching.